Well, if you want to know where the markets are heading, study the cycles. That is the belief of our next guest, who uses cycle analysis in forecasting the markets. Joining us from New York is Charles Nenner. He is the president and CEO of the independent research firm Charles Nenner Research. And Charles, thank you very much for joining us. Now, before we get to your current outlook for the markets, I want to show a quote from an interview you did just a couple of years ago. In it, you stated, "I don't believe in any economic influences on the markets. It is a closed mathematical box." Can you explain what you mean by that? Because there's a ton of economists that are working in the financial industry and financial markets.
Yes, let me explain to you. The whole theory is based on that everything is preordained. There's no at random movement. And if you take an economy, let's say, of the United States, and you look for the last 250 years, it's not that one Fed president or one president elected in the United States can make a big difference. Because it's like a big boat that it's very hard at sea to move to the left or to the right. So if you work with cycles and you project the history in the future, then you see there's not much that can be done in order to change the economy. So of course I check the economic cycles, but there's not much you can do about it because they're very long-term cycles. Which makes predicting much better. The only thing is, for instance, I'm a professor in the university and I teach my students, if you don't believe it, it's not an intellectual problem, it's an emotional problem, because they didn't teach you that this is how the world functions.
So when we're not looking at economic issues, we're looking at cycles and how they, in the history books, can help us predict what's going to happen in the future. Let's take a look at the S&P 500. We'll start things off there as a place. We're just taking a look at a one-year chart. Markets bounced off the lows. In the work that you do, looking at a variety of different cycle history, but also patterns, what is this telling you about where we will go in equity markets using the 500 as an example?
Well, this is an example. So we gave a major bicycle in October and a double-up bicycle in December because long-term cycles bottomed, which was surprising because the news, especially from Europe, was very bad. And then we gave a price target on the S&P future of 1449 and a target date of the 19th of April. So we're still holding long. We're moving up our stops. We still think the S&P can hit 4049, especially there's a new short-term cycle that bottoms next week, so we probably have another move to the upside. And at 4049 or around the 30th of April, we're standing aside just to see what happens over there. So from the low, it's not only the cycles, it's also like if something moves up, it moves up with a certain momentum, and then you can calculate how high it goes. It doesn't move somewhere in the middle at random. So from the 1080 level S&P, we've got a target of 4049, and that for the moment is our target. On the Dow Jones, the target is 13,400.
What about the Nasdaq, though? I'm curious about the Nasdaq and where it's headed, and we've got, we'll throw up a chart going all the way back to 1998, so prior to the tech bubble bursting. Where do you see this going? And I'm also curious, in your studies of the cycles, did you predict the bursting of the tech bubble to any degree?
In 2000, yeah, up to the then I worked for Goldman Sachs. I might say the exact week and the exact level, which was not such a big deal because it's all computerized. Once the system functions, it functions. So we had the tech bubble, and we also projected the low, and the low in 2003. It goes the way it has to go. You can also do sometimes overlays. You know, I work on overlays of the 1929 market, the Nikkei market from the 80s, and the Nasdaq market. And until a couple of weeks ago, you see a total overlay. It goes 100% correlation, which means is the human psyche stays the same, and human emotions decide how the market's gonna go up and down in spite of what economic news comes out short term.
And so, Charles, where's the Nasdaq going here? It's one of the best performing markets so far in 2012.
Right. Okay, now you got me. I will tell you why. So we have an upside target S&P of 4049, Dow Jones 13400. The Nasdaq 100 is just above our price target. I don't know exactly what to make of it. I could say it's because Apple and just one stock is such a big percentage, so that's outperforming. But I have to keep in my hand that my Nasdaq is getting above my price target, which means is if we would go and see a good close above 1449 in the S&P, I have to take the breakout on the Nasdaq seriously. For now, I don't, because I think it's based on one stock.
All right, very interesting. Let's take a look at just one commodity. We're going to go even back farther in time, past 1978. We'll take a look at gold. I'm curious your thoughts on the length of the bull market and whether it still has the legs to persist.
Yes, we sold out around 1900, giving a small bicycle on 1550. We don't have much of the position. My cycles bottom in about 10 days and 2 weeks.
10 days and 2 weeks. Can you be more specific? I'm just kidding, Charles. But
more specific?
No,
I don't have it in my head.
I'm just kidding on that front. But okay, so what happens on that date?
No, usually we have the exact day, but I don't have everything in my head. On that day, the cycle bottoms. So as long as you buy when the cycle goes up, you're okay. It's actually what they used to say many years ago, the trend is your friend. And when we get to that target date, we'll look at the technical position and the price where it is, and then we decide to go long or not. So we don't automatically buy when a cycle bottoms, but 9 out of 10 times that's when we buy, and we're still looking for a long-term upside target of 2,500.
And so, sorry, just to be clear, are we close to the bottom either in time or magnitude for gold?
Yes, in about 2 weeks. That's when the cycle starts bottoming.
And can you turn your attention to crude oil, because it's had an interesting swing today. We have growing inventories. That's pushed the price of oil down, but still it's performed pretty strongly over the past several weeks.
Yes, we're trying to pick up crude around 105. If it shows a real close below 105, we have to go out, because cycle didn't bottom yet. I think, this is what I know, I think the cycle is bottoming the 4th of April, going up into the middle of May. So I expect another up move, maybe to 113 on the crude. But by the middle of May, a lot of cycles are topping. So I'm not in the camp of expecting a very high oil price for the period.
All right, very interesting stuff, Charles. Thank you very much for joining us today.
You're welcome.
We've been speaking with Charles Nenner. He is the CEO of Charles Nenner Research, joining us from New York.